Intel just posted a $10.85 billion net loss, and quarterly revenue jumped 25% at the same time. It's after the bell in New York, and today's earnings tape is full of headlines pulling opposite directions from the operating story. We're starting with Intel. Q2 revenue landed at $16.13 billion, up 25.4% year-over-year. Operating income swung to a positive $1.796 billion, from a $3.176 billion loss in Q2 last year. The data center and AI segment surged 58.9% to $6.3 billion. That confirms a server CPU inventory recovery. AI infrastructure buyers are back at Intel's door. The client PC group, now called CCPG, grew 12.8%, so both core segments moved up together. So where's the $10.85 billion net loss? Tied to an escrow charge, one time, not the operating business. Strip that out, and the underlying turnaround looks the most real it has in years. Next up, Coca-Cola. Comparable EPS came in at 97 cents, up 11%, and beat the 93-cent consensus. That's the fifth straight quarterly beat. Net revenues grew 7% to $13.4 billion. The standout, trademark Coca-Cola volume rose 5%, the strongest in 17 years, excluding the post-COVID rebound. Volume growth is the cleanest read on a consumer business, and this is Coca-Cola's best print in a generation. Management raised full-year guidance for the second time this year. The new frame, organic revenue around 5%, comparable EPS growth 9 to 10%. The stock is up 26% year-to-date, sitting near an all-time high. Applied Materials also reported after the bell. Diluted EPS jumped 33.5% to $3.51. Net income rose 31.3% to $2.81 billion. But operating income grew a much slower 16.3% to $2.52 billion. That gap is almost entirely a $550 million swing in interest and other income. Unrealized mark-to-market gains on equity investments. Applied Materials holds paper gains, not tools sold. So the core tools business accelerated, but only about half as fast as the headline EPS implies. Intercontinental Exchange, ticker IC, closed the first half with diluted EPS up 46.2% to $4.18. Almost none of that acceleration came from Q2 itself. Q2 net revenue grew just 4.8% to $2.666 billion, down from 20.4% in Q1. The volatility windfall that drove Q1 is fading fast. Half-year net income also carries a $390 million non-cash markup on a private Polymarket stake. Translation: ICE is more exposed to trading activity than the growth chart suggests, and that activity is cooling. Now, a Verizon outage from Saturday that may land on the FCC's desk. Voice service failed across New York, Los Angeles, Boston, and Chicago for roughly 4 hours on August 8. Down Detector logged more than 12,000 user reports at the peak. The FCC's reporting threshold is 900,000 user minutes. Even 30 minutes hitting 30,000 users clears it. Saturday's outage almost certainly crossed that bar. Verizon has not disclosed a root cause, and no customer credit has been offered. Quick hit: Home Depot. February's dividend hike was 1.3%, the smallest annual raise in the history the company publishes back to 2020. The payout ratio still climbed from roughly 60% to roughly 65% in a single year. Per-share earnings fell faster than the dividend rose. That's the company's own wording. Watch tomorrow's open for two things: whether the tape treats Intel's operating swing is real, and whether it looks past the paper gains at Applied Materials and ICE, or rewards them anyway. For the full breakdowns and every number behind every chart, visit linevestnews.com and grab tomorrow's briefing free with LineVest Daily.